I have a challenge for you, okay? Your challenge is to make it through this whole video. There's going to be a lot. I know that yesterday's video was around 30 minutes or so. This one is either going to be 30 minutes or I'm hoping 31 minutes. I don't want to make it a whole hour long either. But this is going to be a lot of information thrown at you, and hopefully I can keep it in order so you guys don't get confused. So first and foremost, okay, I'm going to be making these videos in a more deep learning kind of way, where anything that I say and I put down on my chart, I have to analyze, I have to understand why it is on my chart, and I will ask the main questions. Why, right? Why is this on the chart? Why is price reacting off this? Why is it not reacting off of that? Why did I take this trade? Why does this say this on this line? And why does this say that? Why is there a green and red box? Why is there a blue line there? All those kind of questions that you might right now be asking, what the hell is going on his chart? Well, that's the questions I'm going to be answering while teaching you what happened today during this trade recap. And I'm going to be brutally honest with you guys. Today was a lose day for me. Even though you probably saw on my TikTok or anything like that, or even here I can show you, we took a beautiful trade here. But before this trade even happened, I actually went against all my rules, and this was with real money. So I lost, and you're lucky that I'm being truthful, because I'm telling you that I've lost with real money today. I will go over my daily bias and my strategy and what I had planned and my predictions, which actually all came down like to the dot. And with all that being said, I still lost. And I know exactly why. I know why I lost, and I'll explain it why, so you guys don't do the same. So I guess we can get right into it, right? What I would like to do is I would like to go back into, should be 16s. Okay, so this is the trade. We have a lot to cover. Okay. So SPX. Let's do this. Okay. So as we know, actually, is there a daily for SPX or no? Okay, no, maybe not. This is NQ. Okay, so as we know, we have, obviously today was Tuesday. So we have core retail sales monthly, and we also have retail sales monthly. So we have two high impact news all coming at 8:30. And both of these, obviously, the forecast of this was 0.2. Core retail got 0.6. So that is greater than the actual, or the greater than forecast. So actual is greater than forecast, which means it's good for currency, which means that it's bad for SPX. The same thing, even more impactful on retail sales, right? Forecast 0.3. Our actual price was 0.7%. Again, greater than forecast is good for currency, which means SPX goes down. We didn't know this news at all, or we didn't know the results of this news, obviously, before we made our analysis yesterday. But this was the 1 hour analysis that I had yesterday. And I believe what I had, right, is we had this bullish close right here. So if we go back to SPX and we look at what happened yesterday, yesterday we also had news, and we had very, we spiked up, right? Spiked up. And if we look at the where this candle closed, actually, right, you can see that this previous day on Friday, its high is up here and its low is up here. Okay, so obviously now being Monday, we close above this Friday's high. Okay, so now what we would like to see tomorrow is bullish price action, which I actually called out. I would like to say I called out in the Discord that you guys pay for, but I don't quite have a course yet. So I'm just saying that I called out in last videos, if you guys watched it all the way through, I did explain that tomorrow we would be bullish, and we were, but I didn't exactly say where and when we would be bullish, right? Because time and price is something that you guys need to understand. Time is important and price action is important, right? So yes, like I said right here, you probably can see it, we closed, right, bullish. So this to me says that tomorrow we will have bullish price action. We will want to close or be bullish. Now, does this mean close above? No. What I'm expecting tomorrow, and I said this, I didn't say this in my video. I don't think I had the analysis in my video, but like ICT teach, right? If you see this huge news day candle, there's going to be displacement in this candle. So then what I look for is in the 4 hour, 1 hour, all that stuff, I look for some kind of fair value gap, right? Some kind of order block, mostly fair value gaps. And what I really like to do is actually draw out the OTE of that range and enter off that. And so what I did at first was I drew the OTE from the current swing low and then the current swing high right here. So right, current swing low to the current swing high, and then I had my OTE, right? And as you can see, the OTE levels line up quite nicely with this, right? Now price did not come down into this OTE level, and I'll tell you why. I also drew the fib, and the fib actually was like, it basically filled the whole fib. You can even say that this is like a swing low and that's a swing high, but we're not going to take care of that right now. What we're going to do is I will explain, what's the biggest thing and what's the smallest thing. And there might be some things that don't make sense, but when I looked at the chart yesterday, as you can see on my notes, when I looked at the chart, this is what it looked like. So we had the bullish close here, right? We closed off a candle and then we consolidated, right? All this is consolidation. Obviously, we had a spike down. I believe this was still 12 p.m. Oh, yeah. So, no, this was still happening in market. But you can see it's kind of like setting in that range now. You know, these lows, these highs, obviously they get swept or whatever. These highs, these lows. Nice little consolidation. So now when you've watched enough ICT and you've watched enough price action, I can confidently say that price will come down, okay? And I'm pretty sure I had, this is what I had. So this was the, again, fair value gap down here. As you can see, this is the spike down that I just talked about. And so this was the trade idea, the recap or the analysis that I had. So I was thinking that this, obviously strong side, sell side liquidity was there. There was a lot of accumulation. Even down here, there was accumulation. So there was a lot of liquidity void to be taken. If this comes back down here, it wants to come back up in these zones. Because remember, we also have the daily high or the weekly high or something like that. That's up there too as a draw on liquidity. But anyways, on the 5 minute, one on the 5 minutes. So this is very, very close, right? We have this bullish day close here, strong buy side liquidity right up there. And I was thinking, okay, well, price is going to come back down on a fair value gap. Obviously, pre-market, aftermarket, pre-market move, or price doesn't move too much. It moves in very small increments, right? Very small levels. So I was like, okay, it's going to base it off one fair value gap. It's going to bring this, and then pre-market, it's going to come up, and then during market, it's going to dump. What actually ended up happening, and even though I had the bias of being bullish, I knew deep inside my mind that the real bias would be bearish. But we were bearish for pre-market, and then we were bullish market open. So I kind of had it switched up. I thought that we were going to be kind of bullish pre-market and then bearish market, but we did the opposite. And so what actually happened, if we just go down to the 5 minute, I know there's going to be a lot to be drawn here, and I'm sorry for that. But as you can see, this chart looks familiar, right? I'm not going to draw it out, but we can just say that this, was the fair value gap here or whatever that we had. I don't think it was correct like that, right? But it looks something like that, just so you guys can see, right? As you can see, price didn't quite respect this at all, right? I mean, it did, but it didn't. I was looking at this on the 4-hour when I woke up. Every time I wake up, I just look at it, and you can obviously see on the 4-hour we we didn't really respect this at all. So this now told me that, okay, this fair value gap's either going to be used obviously as resistance, also as an inverse fair value gap. So your price is going to use its support now as resistance and to push price lower. So when I saw this, obviously I saw a push down into pre-market. And this is when we had our pre-market. I'll even mark out when we had our news, which at 8:30. 8:30 is around right about here. So this was 8:30 news. This fair value gap is now being used as, you know, as you can see, tapped in right here as resistance. Again, this is all pre-market, right? Pre-market. The real market actually opens at 9:30, which is right here. I'll mark it in blue just so you guys can see blue, and I'll make it very, very big. So that's when market opens right here. So anything after that is real market, but anything before this blue line is pre-market. And pre-market analysis and pre-market price data is very important because it will tell you a lot about what the daily bias will look like. As you can see, my analysis was 50-50 correct, right? We obviously did not respect this fair value gap a lot. Well, we did, but we didn't bounce back off of it. Is what I wanted to see was a bounce back up into this liquidity, to grab this liquidity and then to sweep down. But we actually just came right back down. But if you really think about it, which I now am realizing, is that this actually built more liquidity, right? Because this came down, this is liquidity, right? That's liquidity. That's liquidity up here. That's all liquidity. That's all liquidity, right? That's liquidity. That's liquidity, right? There's a bunch of levels that are now being targeted if price were to come back up from this low, which it did. But now that I'm realizing, right, it's all of this fucking magnet, dude. All of this, it didn't go up because it now creates more liquidity in this whole pool of area, right? This is your target area would be here. And I'll talk about standard deviation, and I'll talk how that was pretty helpful in this trade, and that actually make me, as you can see, the risk to reward, a 30-to-1 risk to reward ratio, completely hit, no drawdown. So yeah, built up the liquidity, and I actually had like a guest speaker today in Investment Society, so I couldn't see the news. But again, if we go back to Forex Factory, we can see that the news was obviously bullish, right, for DXY. So if we go to DXY right here, we can see where it is today. I think it was today, right? Tuesday, 8 a.m. Yeah, very bullish for DXY. No, this was Tuesday. Yeah, this is Tuesday here. So Tuesday 8 right here. So this candle right here there's a lot of going on in DXY. I got to clean this up. I can't even understand it. But you can see this candle right here. This was our news candle. This on 5 minute, on the 1 hour, it looks huge. And then on SPX on 5 minute, it looks tiny. Or on the 1 hour, it looks big too. So price came down. All right. And what actually happened, and I realized this after, but what happened is there was this fair value gap. I believe I got this off the swing low, swing high of, I'm pretty sure it was this to here. So it was the OT of that. And so I was like, okay, what OT lines up with this? And this was like the perfect fair value gap. And in the middle of the trade here, I was thinking, well, is price really right after news? And I mean like the candle basically right after news, is news really going to respect this tiny little fair value gap inside this massive one? Is it really going to do that before market open? Is it really going to do that? If it did, but it didn't. So I realized, okay, what it really wants though is to sweep this inverse fair value gap, because this inverse fair value gap was created on the 1 hour. And where did I have this? What the fuck happened here? Oh, was this on the 30 minute? It might have been. Yeah, it's on the 30 minute. That's what I thought. So it was a 30-minute fair value gap. Usually, so it was actually a 1 hour, right? But obviously you don't need this area because it's already been traded into. So I marked the 30-minute, right? Because this hasn't been traded into. Inverse fair value gap, that's why there's the I, right? Because it got traded through, so now it's going to be used as support. And it actually swept this fair value gap for its full price and use it as full support. So that's one PD array for our bullish trade today, okay? The second PD array, and this comes later on, and this is just for respect, as you can see, these two candle bodies closed above this fair value gap, which shows me very, very strong bullish action. It is not a PD array, but it is showing me very bullish price action, okay? But this is after it closes, obviously, so this candle still need to be ran through. But this is just, you know, oh, okay, my trade is good type shit. The third PD array, I would like to talk about the discount and premium, or premium discount. What I had was these levels. I had the swing low to the swing high where we draw a fib, right, the middle of the zone. And you can see the consequent encroachment of this swing low to the swing high zone before even market open or anything like that was right here, right under this tiny fair value gap, and basically consequent encroachment of this inverse fair value gap. So what that told me was if I wanted to buy any kind of calls, I would need to be under the zone. So anything under here where I'm highlighting, under here to here, or anything under here basically is where I would like to buy. Now, where exactly would you like to buy by though? That's a good question, right? You don't know, but that's where we had SMT divergence on NQ. So as you can see, when I think it's better on the 1 hour if I show you like this. But once this candle hit at 9 a.m., if you look at 1 hour on NQ, at 9 a.m., NQ swept not only these lows, but it also swept these lows. So on SPX, these lows are this low and this swing low. So that means that NQ swept both of these lows right here, swept these lows, right? But SPX didn't. So what does that tell you? That means that NQ is stronger here. And if we see a bullish price action on NQ, that means we should probably see bullish price action on SPX. And if this already swept and already going up, then that means SPX should probably be going up too, right? I wouldn't be expecting anything on ES, as you know, they don't really have the same price action. There's also a SMT divergence here, as you can see right here on ES. So basically the same thing. So that's another, for me, that was another PD array, right? I'm pretty sure if I go back in here, there's some, what did I mark this for? Oh, that's right. This was the blue line. I remember. This was the, if we look at the fib, so the swing low to the swing high, it might not be super accurate, but boom. The Fibonacci tool from the 0.382 to the 0.62 fib tool right here, the bottom of the fill was right under this inversion fair value gap. And so I marked that bottom, right? And so that the blue line right here, as you can see, is the bottom. And what you now can realize is that there was actually liquidity here to be swept, right here. There was liquidity to be swept down here. Obviously, did it go that low? No, but it did sweep kinds of liquidity down here. So not only did that give me another PD array of that fib level that actually respected very nicely, but it also gave me some low resistance liquidity to be ran as sell side. Okay, so that's around 4 PD arrays. That's a really good indication. And then you obviously have your daily bias, right? You have your bias of, okay, well, we're going to be bullish today, right? And not, like I said, I had a speaker today in Investment Society, and trust me, his speech about his speech about the market is that a person that has been trading and investing for 30 years is on the same level as someone that wakes up in the day and says, I want to buy today, right? No one knows where the market is going, so no one can have a perfect bias. You can have PD arrays, you can have things help you, but no one can predict where the market is going to go, right? So you having a bias and having an edge is basically the same thing as someone just waking up one day and saying, today is the day I'm going to buy SPX, or today is going to be the day I sell SPX. So the bias matters, but it doesn't matter, okay? What really matters is the monthly, weekly, and those are the big biases. The daily bias is more of like a, can I trade today because it's going against my rules and bias. Let's talk about the standard deviation. Standard deviation I actually learned a week ago, right? Well, actually way further than that, but I didn't actually use it until today. And as you can see, this just played out beautifully. And obviously it's not gonna be like that every single day. But the trade setup that I had here with all this liquidity was trying to get ran through. I knew that if it's gonna get through this, it's gonna get all the way through here. And so what actually happened was, if you look, we bought in the discount area right here, or actually we bought in the premium, but it doesn't matter, because what I was looking for is that price would come down here and do some kind of reversal where buyers would be buying in the discount. So if I were to buy in the discount, it would be valid. So I want to see a lot of buyers buy in the discount zone right here, where price is going to be cheaper to buy and to push up. So buying here doesn't really risk anything. It just means that we already know that buyers bought it here, so we know it's a good move. So the standard deviation works like this, basically. It's basically a market structure shift, and you take out the swing high to the swing low. So as you can see, there's a range. For me, I can see it perfectly. For you, it might be hard. I'll try to make it trade friendly, if you will. As you can see, there's a market structure shift. And so what happens is, obviously you have 930, right? You have your little down move. You have this institutional fair value gap here that gets tapped into. And obviously this swing high, right, gets taken out by this huge body candle, and that's a big deal. That means that there's a huge, and that's actually where I took my trade. I went short and I got stopped out. Just to be real with you guys, with real money, I went short, even though I had my bias wrong. It was horrible. So I really caught the bottom and really made like $1, and then went down $10. Not a big deal, but I'll share it with you guys. The big deal is that there was a market structure shift, right? Because this swing high created a swing low, which then swept the fib tool, the liquidity on this blue line, and we also had SMD divergence. So that's 3 different PD arrays for sweeping, created a swing low. This swing low then went to run all the way to take out this swing high. That creates a market structure shift, a valid market structure shift. And so I was like, okay, well, if this is the big move up, right, what's the standard deviation? So what I did is, I believe I took the swing high to the swing low. You click standard deviation. Oh, wrong way. So you're supposed to take it, if you want to go up, you go from the swing low to the swing high. Okay. And that tells you your standard deviation. It's basically like a fib, but just going up or down. And your standard deviation basically tells you where the trade is going to go. Not always does it do that, but it basically lines up with liquidity, right? And this actually, like today, actually lined up perfectly, right? So the negative 0.1 fib lined up with this liquidity right here. So that would be my first take profit right here, right? The negative 1.5 lined up with some liquidity down here, right? So it doesn't have to be on the dot, but kind of around here, lined up right there. So actually we'll mark this green just so you guys can see that this was like take profits and stuff like that. The second, right, lined up with these liquidity runs right here. Again, doesn't have to be perfect. It's just around that zone. 2.5, or this whole zone, kind of lined up with what I had up here. And I didn't add a take profit here because this was like my final position, was this strong buy side liquidity, which I knew we were going to take when we took out these 3 take profits right here, right? So that's how standard deviation helped me. Why didn't I target this 0.4 or this -4 or -3 or whatever? This actually probably was like -3.5. There's probably more levels that I can add here that it accumulated to. But this actually came all the way up, which I didn't even notice, in this 4-hour, oh, my bad. Yeah, 4-hour order block. And again, I have this tendency with 4-hour order blocks where I just highlight the whole fucking body, the body before the close. And that's allowed to do, right? But ICT doesn't teach that way, because as you can see, it actually went even higher, and there was probably another level I could have marked out. But if you're still holding a position down here, I wish you the best of luck. Again, previous week high right up here for drawing liquidity. So tomorrow I also have a bullish bias, even though it's probably bearish right now. I also have a very strong bullish bias. As you can see, this 4-hour candle, daily candle got absolutely bought up, right? So now what is it going to do? It's going to just push all the way up to this previous week high. And this is, again, where I told you in the last video, and I'll tell you again, I would like to see what happens here, right? Again, we're in this kind of consolidating zone, right? We can't make a move higher. We can't make a move lower. What happens next when we push into this previous week high? Do we push higher and sweep this fair value gap, or do we go lower and sweep and actually come down to this previous day low, or do we come down into this previous week low? So that would be like the question. Again, let's hop back on track. Let's see. Yeah, I was talking about the 4-hour order block. And then what I like to do and what ICT has taught me is you go on the daily, and what you do is you look at where that 4-hour order block was created. So it was in this daily candle right here. So what you're going to do is, obviously for your levels, you don't know the level. So you're going to take out your fib retracement and you go all the way, you do the whole wick of that level. You do the range. I like to keep it simple, so I just delete all these levels. And the only level I take is the consequent encroachment of that wick. And then when you come down in the 4-hour, you can see how respected those two levels or PD arrays are respected, and that's when you would take out. Now, I didn't target that. I didn't target those levels because I didn't actually know if price wanted to push even higher after this strong buy side liquidity. As you can see, there's quite a 4-hour reaction off of that, so I didn't really want to mess with that at all. Just happy that I caught that big move. I'm not going to go over DXY because it looks like shit and I don't want to explain it. ES actually, oh yeah, this is a good one. ES, as you can see, we can actually draw the, oh fuck, let me do this. We can see the SMT divergence right here, as you can see. And we can also see that at 9 a.m., right, market open, it actually tapped into this daily fair value gap that we've actually been respecting quite a lot. So it tapped into it, again, shows strong bullish price action. And the only target that we had was this buy side liquidity and this stronger buy side liquidity here. And our drawn liquidity is still this previous week high. We are still inside this weekly fair value gap. Again, the consequent encroachment of this fair value gap right here is resting on liquidity. So I would actually like to see if this drawn liquidity isn't pushed higher here at this consequent encroachment. Let's look at NQ. NQ obviously swept. This was a nice little example. This was also, yeah, you can see my, like these charts I haven't touched yet. And you can see what I had previously marked out. Don't know why this is here on 2. Okay. We had an order block, right? Just marked out that 4-hour candle, 1-hour candle order block, respected that order block very nicely pre-market. Came down, marked this like I think it was a 4-hour order block or fair value gap right here. Nice little fair value gap that was formed, and price kind of came into it, came out, and then, you know, pre-market dumped. Obviously, we had news on DXY. We dumped even harder, and this is where NQ really dumped, right? We had this fair value gap inside the fib around the consequent encroachment where I thought price would come back down. I actually marked on NQ because I knew NQ is way more volatile than SPX, that it would sweep this fib and sweep this fair value gap, which it did, but it actually went lower to grab all of this liquidity, which created that, again, that divergence on SPX. Went there, and then obviously had that nice little bullish move up. So this whole move up here was stupid, but at least I had the, I didn't think it would come to the drawn liquidity today, but you could have seen, right, if we just copy and paste this move right here and we had this little reversal right in the middle, you could see that the top would be like around here. So it'd be very close to the drawn liquidity. So theoretically, my bias was right. We were still bullish. We still saw that move up, just didn't see it today. So that was all. I think that lasted longer than 10 minutes. Let's see, am I forgetting anything? I'm pretty sure I went over everything, quite literally everything. Really racked up everything. Note to myself really quick, learn to have less, okay? Learn to have less on your charts, because when I'm looking at this, oh, fuck TradingView, I need to buy TradingView. When I look at my charts, this to me isn't so confusing, but to people that might be new to trading is confusing. to me, from time to time, when I look at it on my phone, it is very confusing. It is very, very confusing to look at multiple lines that I have no clue what it means. And the more words I have to put in saying, hey, this is daily that, this is weekly this, the more crowded it gets, the more zooming in, zooming out I have to do. I just want to get on the charts and know what I'm looking at right away. Or if I really need to, use your computer, right? Go to the bathroom with your backpack and fucking open that computer on the toilet seat and fucking trade if you really need to. But this is all paper trading, so you don't need to do that. But just maybe get in the habit of trying a little harder. All right, I'm gonna leave you guys with this. I hope you guys. Oh, actually, no. One last thing. Yeah. Okay. So this was funny. So this was yesterday, right? I had my pre-market analysis, right? I had all these fucking notes, and this was yesterday. I was typing this yesterday. I have this fucking picture right here of this DXY, and I said, no clue if this even holds up. What the fuck am I doing? If you look back on DXY, what time frame was this? The 1 hour, right? Let's see if this even worked out. Yeah, it looks like I deleted it because I didn't even know what I was talking about. Let's see, where is this? Let's move it here so you guys can see. Did this hold up? So we have the down move right here, looks like boom, 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 boom. And then it comes up. We have sell side liquidity. It actually doesn't hit sell side liquidity. It keeps running up. I guess takes out this liquidity right here. And we actually do run up, right? But we don't run up. Actually, we do. Oh, yeah, we do run up to these highs. Okay. It was good, but it wasn't that good. We didn't actually bounce off straight off the liquidity. So yeah, I had no clue what I was doing there. And I was honest with myself, right? This was honesty. And then we had obviously NQ, which this didn't actually come down. It actually came down all the way here as we just talked. And then, oh my God, this was the trade we took, right? With the loss. And I'll show you this right now where I, again, had the standard deviation. I knew that the most interest area would be the -2, -2.5. So with that in mind, I was like, why am I trading this puts? Like I knew like during this trade, I had every single PD area lined up. And during this trade, I was like, oh, I'm going bearish because of DXY. I was relying off DXY being bullish, and I went bearish. So that was one fault. And I said, what the fuck are you doing? You suck. You had your bias correct. You had standard deviation for levels and still took the wrong trade, you fucking retard. You should quit because you love 50% of your, or you lose 50% of your fucking account in less than an hour. Let me repeat that for you. Let's look at the trade. Got absolutely ran out, completely fucking, R word. What the fuck are you doing? You suck. You had your bias correct. You had standard deviation for levels and still took the wrong fucking trade. You fucking retard. You should quit because you lost 50% of your fucking account in less than an hour. That's what I wrote down today after I took this trade. So I'm being more real than anything. And I also said, don't trade with small positions, have a big contract or more. And this was because, and I'm pretty sure if I still check my Webull right now, I'm pretty sure, yeah, I still have a contract running. If I'm not wrong. Let's see, did this get sold or no? Yeah. Wow. I'm down $22 for the day. So 75%. So we can actually say, let's be more real for the notes, 75%. So basically, I basically blew my account. Okay. So that's another account blown, in my opinion. This contract is still in play. I have to wait for tomorrow for it to fucking manually cancel out because I had a small position. And these are the notes I took after, right? So it does show that I went and dug deep. So I hope you guys learned something from this. I hope you guys can learn, and I hope you guys can comment on the video and tell me what I should improve. I will see you guys in the next one.